Hey guys, welcome to Friday the 24th, and this is a supplemental video to go along with the video that we did earlier in this week, looking at the Nat Gas situation and some of the changes taking place there. Mainly the shift happening between exports from Russia coming into Europe and a colder winter forecast overall, really driving up the price of that Henry Hub Nat Gas contract, in that there is now sort of more export opportunity for that gas and more demand for that gas, really not only in Europe, but other parts of the world. Seasonally, this is a good time for nat gas. However, it's outperforming above prior seasons at this time. We talked about a lot of this in the prior video, but really as an addition to that, it's one thing to see something like that in the market happening, but how can you capitalize that as well if the kind of futures market has kind of gotten away from you, or you're kind of taking nibbles out of the futures price, and you're not really comfortable with holding a long-term long in gas futures. How else can you make money out of this move as a trader? And certainly one of the videos I did before, a number of weeks ago, not on the platform, but was really looking at how can you get onto a really big move in the curve of any product, like for example oil. And what we talked about back then was getting on the calendar curve, and that you can, if you think we're going to get really expensive over the next, or up in price over the next, say, 6 months or 3 months, what you can actually do is you can use a calendar uh, spreads essentially to do that, and in that you would be long the front month and short, a month further down the calendar. And given the seasonality of nat gas, we don't really think that nat gas is going to be crazy bid into all-time highs come, say, the springtime when we're coming out of winter, right? Or even a month before that. So what you could do is actually be long the front, or well, yeah, sorry, you could be long like these front months of like November, December on that gas, and then you'd be selling the calendar months in springtime. So say February, March, the G or H contract 2022. But that's another video that we're going to look at further down the line. But for this one, really, the move is happening. Are there gas companies that we can buy or trade to avail of what's happening? Are there ETFs? And of course there are, right? The market never fails to give us opportunities on where to place our money. Some might say on a million different ways to lose your money. But that's a totally different topic and video. So I thought it would be kind of interesting to have a look at some of these equity plays in the marketplace right now. And so just want to get up the Thinkorswim system, and we can look at the spot price of Nat Gas. Now this is the all-time max view monthly bars for the Nat Gas Henry Hub Henry Hub market. And we'll just do a little bit of analysis here on this anyway, just as a point of duty, really. So I'm just going to, just going to go through this real quick, drawing up some significant areas of interest, especially that are close to market right now. Like, for example, this sort of low here, August '07, interesting. This sort of area here. So the high on December um, '09. Some other stuff coming into play here. And I think that's about enough that we need to do for the analysis. But as you can see, sure enough, we are definitely bid really up since June last year, in conjunction really as well with the oil price, energy getting more expensive. The real linchpin for this market was, of course, last December, and I talked about that in the video. And we've largely looked at the reasons of why we're both, why we have moved down and then we're back up in nat gas. So, really this December inflection point all important, and we might just mark up this November 2019 level. Okay, fine. Nat Gas, we can all agree, is on the bid and appreciating at a quite an alarming rate into this winter. Okay, so trading for what 5.089s. But what about the companies that make money by exploration and production, E&P, or development, or storage, or shipping of nat gas, right? And we can look at a few here, but really I'm only going to focus on two, right? Um, Now we had been looking at CEQP here as a pretty decent company. Now CEQP are an E&P company for gas. Um, I think I haven't done too much due diligence on this company as of yet. I do know that it's been definitely in the doldrums, trading just above $2. I was looking at buying this at $4, I remember, and definitely missed out there. But I like the structure of this company from a technical point of view. I think as this Fibonacci extension sequence has shown, right, this is by taking the high here of May 2013 to the low of December 2013 to the pullback high on July 2014, right? Now, that did project us to the 112.4 extension. And sure enough, I mean, that was actually almost zero in price for this contract. And the low it traded was $2.65, but really good target there. The Fibonacci extension put us on $2.02 even. So all right, fine. It was off by 45 cents on the bottom. Well, fair enough. Now, technically, I see this market as having a pretty decent move to further to the upside. And I'm going to go off the monthly bars and we'll go down and like look at 3 years in a week right now. So just look at the weekly bars here on this thing, and we can kind of get a more granular view. So how about we kind of look at price projections? And this is the first thing I really do when I'm interested in kind of getting into something for a medium to long term hold. And I put on the Fibonacci extension sequence like this. You can see that we're holding like $100 here. Just let me change over to the charts. Here we go. Here is CEQP. So you can see that just going back to that all-time max monthly view, you can see here the price really crushed down all the way from that high in kind of 2010 to put in that all-time low at the 265s, right? And so, yeah, as we work our way back up, we just, instead of looking at the monthly bars, right, like this, which you can do, fine. But I like looking at the weeklies. But yeah, I think that's suitable to look at the weeklies. Just go to 3 years in a week here. So I think largely it was job done by getting up to this $29.23 area. But then I'm looking at the 618 pullback, and that would be at $20, right? And then you're not too far away from this prior high here on what was this? This was June 2020, right? So in this whole area, really where we are now, from $20 up to like 27s, I actually like the longs in this area. And really, if we look at projecting a little further on from this Fibonacci extension, we're getting some really interesting areas up here, like the 37 buck handle, the 53 buck handle, 79 buck handle. Now, normally I would say, hey, you know what? This looks like great idea. Well, Nat Gas is crazy bid right now coming into winter. You know what? That crazy bid is going to dissipate and it's going to completely unwind as we move through the winter and start trading the calendar months for like, January, February, March, like the FGH contracts and the futures. However, the reason why I believe that there is a difference in what's happening now versus any other year is that the whole supply picture for gas is really, really in trouble. And we had yesterday BP coming out saying that they're closing some of their petrol stations in the UK because not because of supply, but because of transportation issues. So can those sort of transportation, while trading petrol is a different thing, and that whole occurrence doesn't have any impact on the main commodities markets. Um, what what we do need to look at is the logistics and the delivery system. Um, and now I don't think we have that same level of threat at all in the natural gas space. But if we kind of look back at the Nat Gas contract here as we trade, I believe that we are going to basically sustain higher prices, um, coming into the winter and through the winter, because essentially the production and development picture just is not able to rebound fast enough for people to then start to, look to sell cheap nat gas coming into the spring. I think people are going to be thinking about having contracts bought forward to expiration, in winter 2022. That's going to be, yeah, like they're going to be loading up in the July, August, September, October contracts in 2022. And that's just going to keep the whole energy curve in contango, essentially, right? Think prices are higher in the future, as in you're looking up. Contango is up, right? So this is what I'm looking at across the natural gas space on the front month future, and then of course we have these companies that we're looking at. Now the due diligence is firmly up to you guys to look at your balance sheets on these companies, what their markets are, how much exposure they have to the spot price, and the answer to that would be probably quite a lot. Um, but if we kind of look around the rest of this market or the rest of the gas space, we can look at like an ETF, right? So you have Boyle, all right. So Boyle is here. What else on the ETF front is pretty good? Well, coal, but that's an inverse ETF, right? So you would hedge some of your risk with the coal ETF. So we've got some moving averages on here. Let's just go out to like the max monthly, and we're looking at, these are monthly moving averages. So just like we'll remove some of these as we're going. Um, so yeah, you can see this is totally beaten up, right, on the monthly Boyle, right? Um, Now, as you can see though, if I go into, sorry, it's not obvious to see there, but if I go into a logarithmic version of this, we start to see the inflection point. Right now, this is quite cheap at $64.34. It has been a lot cheaper. Going back into March, April, May 2021, see it's lifting again with oil out of these lows. All right, so now essentially we're testing into what is the, I think this is the 20-day. Well, this will be the 20-month moving average. We're testing up into that again now. But in terms of percentage gains, I think we can easily, get up into seriously higher prices here. So as this is now a non-linear price chart on the right because it's logarithmic. So we're currently trading 64s. I see the resistance up here at, like 445. Retesting up here, this is 5,815. These are big prices up here. Big prices. Now, this is like 2016 prices going through. Even if you go to the 2018 low, that's 237 bucks. All right. So I think this ETF has some serious legs. We can go down to the weekly view here, 3 years, 1 week. This is a logarithmic chart still, and you can start to see this trend really picking up out of this zone with the zone high here. So $49 for a pullback. I think that'd be a nice buy. Moving around the picture, cold as well. I had actually said during the week I thought cold had exposure to coal, which is completely incorrect. It's a totally different ETF. Cold is actually an inverse ETF. All right, an inverse ETF. So this is basically the inverse of something like Boyle, right? So if you're long nat gas, right? Say long and futures, or long Nat Gas ETF, or long like one of these companies, and you want to hedge a bit of risk, or you have a day where you think, oh, I think we're going to pull back quite deeply on Nat Gas. I want to hedge any exposure on the downside I have in my portfolio, which is generally long Nat Gas. You would therefore go in and you would essentially you would be trading the cold trading the cold ETF. All right. So then you therefore would then go in and say, right, as Nat Gas goes up, I can have my portfolio go up with that. But if it's going to come back, but I don't want to exit or get net short any of those individual positions, but I do see an opportunity on the downside for Nat Gas temporarily, you would therefore go in and trade cold, as this is an inverse offering, and there are quite a few inverse ETFs out there. And the thing about cold is it actually works. It's a 2x leverage inverse. All right, that sounds really exotic, doesn't it? A 2x leveraged inverse. What does that mean? Well, essentially, it means that it will go. So if the nat gas space is going up, right? Say if Boyle is going up, um, cold will go down, right? And that's the inverse part of that taken care of. And then the 2x is basically it will go down twice as fast as Boyle will be going up, for example. All right. So there are lots of inverse ETFs out there to have a look at. It's a whole, ETFs it's a whole universe of products to trade, to be honest. So yeah, so that kind of wraps it up. I mean, there are like Southwestern Energy. These are a great company actually, but they are oil and gas heavy on oil and gas exposure, more towards oil, I would say, than gas. I've actually been in their offices in Houston. Nice people. And again, we're looking at the monthly picture here, but certainly the highs we had 2012, 13 have been long left behind. But do we see a brighter future for these oil companies? I think we do. I think we really do. We're going to follow this up with another session today, which will be available only to the pro traders, covering MLPs in the oil and gas space and the general energy picture. And master limited partnerships is what their full name is. And look at the tax efficiency and why you should trade MLPs and really substitute, some of those lower volatile holdings. You should swap them out for some LLPs, or certainly how they make a great addition to your portfolio. All right, hopefully this was useful. Any questions or queries, send me an email, tim@duggancapital.com, or reach out to me in the Discord room, and I'd be happy to chat. Okay, cheers.